Okay, perfect. Welcome to the weekly Q&A. If you're new in the weekly Q&A, we just go through questions. So if you're new, if you have questions about trades, anything really, this is a good time to ask, and then we'll make sure to answer everything as good as I can. Welcome, Bill, Ontario, Canada. Nice to have you. Hope you're having a good long weekend. Yeah, so if you guys have questions, feel free to put them into the chat, and then we're just going to go through each question one by one. And if you're watching the replay, if you're on YouTube, please feel free to put your questions into the comments, and we can also answer your questions if you're watching the recording later on YouTube. We've had some really good trades play out today, or get triggered today, so hopefully you guys were able to get into some of those. But yeah, any questions you guys have, put them into the chat, and I will answer those one by one. Any questions, guys? Today, CAD CHF Trade disappeared and back again. Yeah, so CAD CHF, let me open this up. Sometimes what you'll see is price is wrong. Let me here click this. CAD CHF. There you go. Okay, yeah, CAD CHF is still valid. I did break above our entry. Kind of depends how this closed. So if you're in the trade, you can stay in the trade. It is still valid. If you're not in the trade yet, you want to wait for price to move below this level, and then you can put your sell orders, and then you can take it. But again, if you're in the trade, just stay in the trade. If you're uncomfortable, what you can do is you can move to break even. So move your TP to break even. Once it comes back to retest this level, then you're out of the trade. But you never want to close a trade in drawdown. If you're uncertain, if you're scared, if you want to get out, don't close it. Just move your stop loss or you take profit to break even. And once it comes back for the retest, then when you can get out. And then in order for you to come back in, you can wait for price to move below your entry, set up your short entry again, and then from there you can get triggered again. But you never want to close a trade when it's in drawdown. So if it's trading, up here, you don't want to close it. You either leave it or you move your TP to break even. So those are the two things you can do: move to break even, or let it hit stop loss or TP. But you never want to just get out of a trade for no reason. Hey, I'm at work all day and can only check trades a couple times. Is the system set and forget? Yeah, so if you're using the strategy mode, on the daily, if you're doing that and you're following all the rules Asker gives you in the week 1 and week 2 training, and then you go through your pairs once a day, you set it up and you leave it. You don't need to modify it. You either let it hit stop loss or TP. That's all you have to do. So yeah, it's if that's the way you want to trade, a few minutes a day, that's something you can do. I'm a newcomer. I'm going through the trades. How can you tell which one is good trade? I assume that comes with practice. So, Imran, so what you can do is every week we put together a weekly trade review. It comes out every Sunday. So we actually just had one come out yesterday. So make sure to watch that video if you're new, because there I go through each setup that's currently available, and I explain to you which one is good and which one is not good. So if you're new, that's a really good video to watch, because that's how you're going to learn kind of what setups to avoid, which ones are repeated, etc. So you can watch that once a week. That's probably going to be the best way for you to learn that. If a new trade appears on the strategy mode, is it important as to where the bar starts in time? I don't know if I understand the question correctly, Danny. Can you elaborate a bit? So we'll come back to the question later. Next question is, can you explain break even? I still don't understand it. So break even is when you move, for example, you're in drawdown. So right now price is trading above entry. You want to get out. What you can do is you can move your stop loss and MetaTrader or whatever trading platform you use, you can move it to the entry. So you move your to take profit to the entry. What that does is when price comes back into your entry, it'll hit your take profit, and because your take profit or the stop loss is at break even, you will be closed at break even. So you're not going to make anything, you're not going to lose anything. It's going to be a break even trade. That's the best way to get out of a trade. You don't want to close a trade in drawdown just because it's in drawdown. The drawdown is part of trading. Like, you shouldn't be afraid of this. Like, this is completely normal. What CHF is doing right now, it's completely normal. Price doesn't always hit the box and you reject it right away. You know, those are like trades you get once in a while, but a lot of times you're going to be sitting in drawdown, and that's completely fine. There's nothing wrong with that. If you do want to get out, move your TP and your stop loss to break even, and once price goes back, once price goes back below the entry, then you can put up your limit orders again. Can you talk through the risk management settings and stop loss ratio? So usually it's already going to be preset. So what you do is if you go to the rectangle here, up top on the algorithm, you can enter your account size. So whatever the account size is, put it in. And then from here, I wouldn't change the risk. I just keep it at 0%. And then your stop loss ratio would be at 1.7. And then click apply. That's going to give you your lot size settings. So if you, whatever you change in here, so let's say if you have a 20,000 account, the lot size here is going to update, right? If you have a, a $5,000 account, the lot size here on the BFT panel is going to update. I suggest you don't play around with the stop loss ratio. 1.7 is totally fine. And don't move your stop loss. Keep the stop loss where it is. You don't want to move the stop loss. The stop loss is here for a reason, and if you move it, there's a high chance you're going to be stopped out. The stop loss is here because there's a high chance that you can basically close your trade at break even. So you don't want to move it. The risk is calculated based on the stop loss, so there really isn't a point for you to change it. It's a really good stop loss placement. It does look like a lot, like the risk reward ratio is not in your favor, but the way these trades are calculated, the trade will be in your favor over a period of time. You just have to keep placing trades, follow the strategy, and then you guys will be good to go. Even if the trade is going bad, just leave it and let it run its course. Yeah, that's the best thing you can do. If the trade, for example, this one can't CHF, right now it's a drawdown, just let it do its thing. You don't have to touch it. Just let it do its thing. If you keep taking trades, you will be in profit over time. What if the red entry rectangle starts more to the left or right? Does it mean anything? So if this short entry, if it moves, it doesn't mean anything. What matters is that it's on this price level. So it's not going to move. It's not going to move in you. How much is a good capital to start trading? I can't tell you how much is good because I don't know your financial situation. So the best thing you can do is talk to your financial advisor, figure that out. In terms of the algorithm, a good starting balance is $1,000. You're gonna have to look at your personal situation and see how much you can afford to lose and risk. So whatever that is for you, that's the amount you should start. But always start with demo. Make sure you understand the system. Make sure you can trade the system. And once you can do that, once you're consistent with that, then move to live. Is the Dojo just a deep dive into the X mode, or is it just like trading into intro intensive? The Dojo is yes, you learn X mode, but X mode is just a tool that'll help you become a better trader. So with the Dojo, you get thrown into a group of 8 other people, and it's a group where everyone is accountable for each other. So you're going to be trading with them, you're going to be learning with them, you're going to be shown exactly how do they trade. So it's an environment where you're being pushed into like assignments and um, and things to execute on, and that's going to be in a group environment. So it's not going to be like a global chat where you're in a group with everyone. Basically, the way it works is you join a dojo, you get a 2 hour live training. From there, you get added to your closed dojo group with 8 other people, and from there, every week you'll be given an assignment, and through those assignments, it's going to push you to become a better trader. How long do you hold trades for on average? So I hold trades until they either hit stop loss or TP. You know, that could take anywhere from a week, a few days. Um, we've hit TPs. We've had situations where TP was hit within a few hours, within a few minutes. So you know that usually it's a couple days, couple weeks. Um, but again, you know that's going to depend on the market. But you know the real truth behind the question is we let it hit to stop loss or TP, and then that's it. I'm a new NZD short position trade entered last week. It's showing no trade zone. Could you please provide analysis on this pair? So look. So your NZD, I would move your stop loss or your TP to break even. So when it comes back down to neutral level, you're going to be able to close the trade at break even. So don't exit the trade, just leave it open, but move your take profit to where your entry is. And you can do that in your trading platform. If you have missed the trade, should we leave or still go ahead with it? So, you know, that depends. If you're joining or if you're seeing a trade setup, let's say USD JPY, if we look at this, it played out today, right? So it hit our short entries, and if it's trading below our short entry, now you can place your limit orders. So if you're not in a trade yet, you can place your limits now. But if let's say you know price is in the level, we're not going to go ahead and enter. We're going to wait for price to move back down like it has now, and then we can place the limit orders. If price is above the short entry, like CAD CHF, if it's trading above it, again, we want to wait for price to come back down below our entry, and then we can place the limit orders. So um, if you miss the trade and it's your like the first time in the entry or second time, then you can enter. If it's a repeated trade, then I would just skip the trade and look for a new one. But again, you can watch the weekly trade reviews on a YouTube channel to see what trades are repeated and which ones to avoid. So limit orders are, you know, when you set your buy or sell on a specific price level, and we want and it's an order that it hasn't opened yet. So we want price to hit that level, and then once price hits that order, hits that price, then that position is going to be opened. So let's say if you're trying to sell, maybe we can find a better example, perhaps on GBP USD, for example. This is our long entry. So what we would do is we would place our buy limits on this level, and when price comes down, it'll hit our buy limits. They get opened, and then from there we hope price will reverse back into our TPs. So the limit orders for the buy limits, we can only place those if price is trading above our price. So we can only place buy limits if price is trading above our entry. We can only place sell limits if price is trading below our entry. In the Telegram group, they say the win rate is 70%. Does that include that the trade hits all TPs? So if if the trade hits TP1, that's a profitable trade. So it's based on hitting any TP. So TP1, TP2, TP3. But we've had quite a few trades hit all TPs. But yeah, as long as the trade isn't closed in a loss or break even, that's a win. And 60% win rate is good for a trader. So if you're sitting at 70%, then you're above average. So 70% is really good, and that's kind of what we're seeing for the people who follow all the rules. This one hasn't triggered yet, so this one is actually a fresh one. Usually CHF, that one hasn't played out yet. So you would go into your BFT panel, copy your entries, put them into your trading platform, make sure you include the stop loss and take profits, set up your sell limits, and then just wait for price to go into your short entry. From there, they're going to get triggered, and then either from here, it's going to go to stop loss or it's going to go to TP. Those are your two options. How different is trading stocks, metals, cryptos, and from Forex? It's really the same thing. The methodology is the same, right? So we wait for price to go into levels with limit orders. We take the entry. Um, so yeah, I mean it's pretty much the same. Of course, with Forex, you have more movements, you have more like volatility. With stocks, stocks are a little easier to trade overall. Your win rate on stocks usually is going to be higher than on Forex. Um, Cryptos is similar to stocks. Metals is going to be similar to Forex. So it's the methodology to the foundation is the same. The only difference is kind of the way they move, right? So with stocks, you're not going to have that many, not it's not going to be that volatile. You're not going to have going from buys and sells too often. Probably with stocks, you just find stocks that had a retracement, and then you just buy the support. That's really all you have to do with stocks. So, but yeah, it's almost the same thing. Any tips on monitoring potential X mode trades in lower time frame? I guess that depends on your strategy. So um, that's going to be a very long call. But in essence, at the foundation, we're looking to buy support in an uptrend and sell resistance in a downtrend. So if we look at this one is a little more advanced, but if we look at maybe um, NZD right? So we have the support and we're uptrending and we're looking for price to hit our support and then buy it. So, this strategy on a daily works the same on the low time frame. So if I go into this, you can see a balance of support. So we're looking for strong, good support levels to buy in an uptrend, and we're looking for good, strong resistance levels to buy in a downtrend. We always want to go with the trend. In your opinion, what's the best to trade stocks, crypto, forex? It depends on your experience level. So if you're experienced, or I guess it depends on a few things. So whatever you prefer the most. Some people just prefer stocks over forex. Um, for me, I've always started with forex, so that's what I stuck with. I haven't gone into stocks yet. I've heard people going from forex into stocks is a lot easier. Going from stocks to forex is harder, just because forex in general is harder. So um, there's no best way. There's no best asset. It's just a matter of learning one asset and then doing it until it works for you, and then you can move on to the next. Like I said, forex is the harder one. Stocks is easier. Um, Generally, stocks is a lot more regulated. It's going to be a lot harder to get started, to get set up and running. Like the level of entry is harder on stocks than it's forex. Um, Crypto is easy to get started with too. Yeah, so play around. We'll see what works best for you. So a 4-hour X mode trade should be closed in 4 hours. 1 hour to be closed. 1 hour. No, so the time frames don't have anything to. They don't. That doesn't tell you how long you're gonna trade. We don't know how long we're gonna trade. The time frames mean that every candle is equivalent to the time frame. So we're on 1 hour. That means every candle is 1 hour. If you're on daily, on a 1 day time frame, every candle is 1 hour. Sorry, 1 day. So this bearish move here is 1, 2, 3, 4, 5 days, and we don't know how long it's gonna take. We don't know the market. We can't predict the market conditions in the future, so they just tell you how long one candle represents, whatever time frame you're on. But yeah, the higher you go in the time frames, the longer the trades will take to play out. The lower you go into the time frames, the faster the trades will play out. But that doesn't mean the lower time frames are better. The lower you go, the more confirmations you need to enter a trade, and the more experience and screen time you need in order to trade those lower time frames. So the daily time frame, that's the easiest to trade. It's the most accurate. I suggest you guys all just kind of stay on there for now. Um, and then if you're just learning X mode, overlay strategy mode with X mode, and then see how those two kind of play together. Once you get that experience, then you can slowly move into the 4 hour. But yeah, when a strategy mode trade setup appears on a daily and weekly simultaneously, does that indicate a higher probability that a trade will be successful? No, not necessarily. I wouldn't use that as a confirmation. And the weekly time frame, I wouldn't take any trades on it because then you're going to be holding trades for a very long time. So I wouldn't even look at the weekly. Just look at the daily. If there's a green box on your chart on daily, that means it's a good setup. We already do the filtering for you, so. But I'll always make sure if you want, you can watch trade reviews because obviously there's sometimes when, for example, a long entry has been repeated multiple times. So in that case, it's a lower probability setup. But if it's a fresh one, like for example, USD/JPY or USD CHF, GBP USD, those are fairly fresh. So the probability on those is going to be, the probability is going to be in your favor. Does the success ratio on extension 1 and extension 2 apply in a counter trend trade? No, so those numbers are with the trend. Yeah, so looking for an uptrend, we're looking for green extensions to buy. So if we go into the 1 hour, so in an uptrend, you only want to buy these. In a downtrend, you only want to sell these up here. Today I was up 3.6% now in the red. Would I have been wise to have taken profit or trust the system? It would not be wise to take profit because if you'll be closing now at 3.6, then you're potentially missing like 10% or 5% or another 3% on top of that, right? So you have to be patient. Just let the trades hit your TP. Um, of course, in those 3.6%, there could be some losers, but that's part of trading, right? You can have losers, you can have winners, but if you keep executing trades based on the system, with the law of average and the law of probability, over time you're going to be in profit. We don't know when that sequence of losers or winners is going to come in. That's why we have to keep taking trades. If you get a loser and you stop trading, that next trade could be your winner. So it's really important that you guys keep taking trades, even if you go through a sequence of losers, because that next sequence could be a sequence of winners. And we don't know when that sequence is going to come in. So it's really important you guys keep taking trades, even if you get a loser, but never close a trade when it's in drawdown. A drawdown is part of trading. That's something we really can't avoid. So, if you're in profit and the next day you're not in profit anymore, as in like floating PL, don't get worried. That's completely normal. We need to let the trade develop and breathe and take some time. And usually, when you see price consolidating and it's not moving, let's say it's moving between your profit and break even, profit break even. And I'm talking about floating PL, not closed trades, open trades. I'm talking about open trades. Usually, when it's consolidating, that means the market is collecting a bunch of orders for a big move. So if the trade is not going anywhere, just be patient. That means it's collecting orders. It's collecting liquidity for the market to push into the next direction. So the best thing you can do is just let it do its thing. If you keep just doing that, just let it do its thing. Don't play with the trade. Let it play out. Then you're gonna be sitting on that 70% win rate. Yeah, and that's just something you learn over time, right? So if you're new, you might get scared about some drawdown, but it's really part of trading. There's nothing you have to worry about. Um, the people that avoid drawdown, those are the people that are going to lose. So just accept it. It's part of it, and you can't avoid it. And as you try the system out for a couple of months, a couple of weeks, you'll see that everything works out just fine if you trust the rules. The people who close too early, or they move their TPs, or they move the stop loss, those are the people that have a hard time having results with the system because they're not following the rules. So if you really want to see if this system works, if BFT works, just follow all the rules and let it do its thing. And that's why it's a good time to, or a good reason to be on demo, because then you can really just let it do its thing. Don't mess with it. Let it hit TP or stop loss, and then you can see the results. Is there anything we can do about swap fees? I had a trade last week that did make profit, but a lot of it was canceled out to swap fees. I had a trade running for 9 days. So that's going to depend on your broker. So just look at different brokers, see which one which one has lower swap fees. But swap fees, something we can't avoid. Some brokers might have more, some might have less. So just look at your broker, see what they're charging, and see if we can find a better deal somewhere else. There's some that don't have swap fees, but most of them, most of the good ones do have swap fees. So that's just a fee, we have to pay to be in business. I don't think it's a big deal, but if you want, you can look at some brokers. Today there were about 6 or 7 trades. I went for all of them. Is that ideal, or just pick only a few of them? So that depends. Are they going to be on the same currency pair? Are they correlated? Is one going to be, it also depends when they're going to be triggered, right? Is one going to be, are they all triggered at the same time? If they're all triggered at the same time, probably not the best idea. But if you just set your limits and one is triggered today, one is triggered, next week, because we don't know when they're going to be opened, that's fine. Uh, so yeah, it really depends on the trades. Any recommendations for US traders? So for US, I recommend either FX Choice or Oanda or LMFX. I prefer FX Choice personally. That's what I use. I'm in Canada, so I got the same, almost the same regulations as you do. So I use FX Choice. What is normal winning percentage should be expected? General rule of thumb: if you're sitting at 60%, that's really good for Forex. Most users are generally get 70%. We have some people who have a little more experience. They're getting 80%. But again, this depends on your personal experience. How are you managing your trades? If you're following the system and stuff like that. So 70%, 60% is good. I think that's something you can aim for. over a year when following strategy mode on the daily time frame. Yeah, I would say 70% is good. Again, I can't guarantee returns. I can't tell you this is how it's going to be. The market changes, but based on the past performance, on past users, on current members, 70% is something we're seeing. And again, based on your personal trading, you might have something else. Yeah, it just depends on your experience. If I have a trade that is identified by the Navigator and I put in my orders, there will be some time before they're executed. The algo will change the stop loss TP, etc. Should I edit this daily, etc. So it's not going to change too often, your entries and stuff. But if so, actually the entries they're going to change a little bit, but it's going to be based on the reason we do that is because if like 1,000 people on the same broker enter at the exact same price level, the broker might catch that. So everyone's entering on a slightly different price. So when you refresh your navigator, that price might change a little bit by a few pips, but it's not going to affect your results. So there's really nothing you have to change. Of course, if the entry like goes to a whole new level, then you can change it. But usually it just changes to a no trade zone instead of changing the TPs or the short entry or the long entry. Usually the TPs might change over time, but again, it usually doesn't happen. So just set it up and you can leave it. So as long as you don't, as long as there's no trade zone, you should be good to go. Yeah, hope that makes sense. Yeah, I stopped sharing my screen just so you guys know because I'm not really showing anything. I'm just talking, so don't worry. I'm still here. I wasn't showing anything on the screen anyway. I was just answering questions. What is user base like for BFT overall? Like, are they typically newbie, part-time, trader experience? I would say most of the traders that come in, they're a month, either like fairly new, it's like a month up to 4 months. We have some people who've now been using it longer, like 12 months, 8 months, 9 months. But we're seeing a lot of like 3 months, 4 months is what we're seeing a lot. We do have experienced traders using our X mode too. So people who've been trading for 15 years, 20 years. So it's really across the range, but I think a lot of the people that use strategy mode, those are going to be more like newbies or part-time traders. And the people who use X mode, you're going to see those going to be more experienced. So 4 months, 6 months, 1 year, 5 years, 10 years, 20 years. Really depends. If my existing order disappears on the navigator, should I be worried? Um, so if it disappears, what you can do is you can move your TP to break even. Um, if you're in profit, just let it to TP. If you move it to break even and the trade does come back up, then you can always re-enter with limit orders later. But the best thing you can do is just let the trade play out. So even though sometimes the algo shows no trade zone and you're on a trade that was on the algorithm before, you can just let it play out. A lot of times, the algorithm recalculated, but the trade can still play out. So yeah, that's just kind of the general rule of thumb. Best you can do is just play it out, let it play out. If you're uncertain, if you don't like it, then you can move your stop loss and TP to break even and just re-enter later if that trade is still visible on the navigator. But I mean, you guys should never be worried. We're using only 3.5 risk, so even if it does hit stop loss, it's not the end of the world. Yes, you're gonna lose some money, but if you just keep executing and you take the trades the navigator gives you, you will be in profit over time because we have more winners than losers. Of course, if you skip some trades or if you stop trading or if you only take one trade the navigator gives you, then that win rate is not going to be the same. but if you execute on the setups that the algorithm gives you, then you're going to be in that 70% win rate. Why use X mode? It seems like a lot of risk. Do people make more money in a short amount of time? So X mode is the engine behind strategy mode, and you should only use X mode if you know how to trade. So if you don't know how to trade, which based on your question, I think you're not at that level yet. So you don't have to think about X mode yet. X mode is what traders who know how to trade use. So it gives them the entries, the exits, and stuff like that. It's not going to tell you how much risk to use. You have to calculate that yourself. What your lot size is going to be, what your position size is going to be. Basically, you have to build your own strategy around X mode. With strategy mode, the strategy is given to you, right? You can just execute. With X mode, you have to build your own strategy. So, and you can only do that when you have experience. Do people make more money in a short amount of time? No. So, there's people who swing trade on X mode, and their trades take just the same amount of time it would take you on the daily strategy mode. When do you suggest people move beyond major and minor pairs? If you're trading Forex, really never. That's all you need, the major minors. I would even, suggest just trade the majors. Especially when you're trading X mode, just trade the majors. But you don't need to move into exotics, and you don't need to move into commodities or indices or equities. Of course, you can if you want to, but if Forex is working well for you, I mean, you don't really need to move into anything else. What is the advantage of scaling into orders? It's going to give you a better risk reward ratio, and it's going to give you the best price, right? So the market doesn't just, for example, on USDJPY today on the daily, if we look at this trade, if you enter just here at the bottom, you're going to have a less profits and a worse risk reward ratio than people who've entered at the top, right? The people at the top, they got a way better price than the people who've entered the bottom. Does that make sense? So that's one of the reasons. And the next reason is if we scale in with multiple positions, it allows us to scale out, right? So by scaling out, we can close the top position at TP1 and then secure our other profits or other positions to break even, and then take the rest of the table when we hit or TP2 and a TP3, or sorry, TP3 over here. So it's going to allow us to scale, or scale in allows us to scale out, which is a good risk management strategy. And again, it gives us a good position management. I hope that makes sense. Oh, you can't see my screen, right? Forgot. So let me repeat that. So if you enter a short on this level, but price is gonna move more up, why not get a better price, right? So in this case, we got the best price possible in USDJPY on top here. So if you enter on the top, you're gonna get a better reward when you hit TP1 over here, right? So when you scale in and you scale out, you have better entries, which gives you a better risk reward ratio and better profits. And then also, most importantly, it'll allow you to scale out. So we don't know if price is going to hit TP3 at the bottom here, right? We don't know. But we know price has a very high chance of hitting this support. So if we have multiple positions, we can then close a part of our position at this TP point. And if price decides to go further down, then we can close the rest at the next TP point at the bottom over here. Okay, guys, we'll leave it at this for today. If you guys have any other questions, just type them into the global chat. A ton of people who can help you there. I'm also there. If I see your question, I'll be able to answer it there. Thanks for joining today. We'll be doing this again next week, so feel free to join. Bring your questions, and yeah, I'll see you guys in the chat. Have a good week, and I'll talk to you guys in the global chat. Bye bye.